Welcome back, everyone. We hope that you enjoyed the first leg of our presentations. The second leg will be a panel discussion with these three portfolio managers. I have Dwayne, Nick, and Lara. Welcome.
Thanks.
Despite the good start to the quarter, both local and global markets ended the quarter on a negative. What are some of your thoughts on this? I can start with you, Dwayne.
So when it comes to the South African market, obviously had a very strong start to the year in January, and that was really driven by the reopening of China. So resource stocks doing extremely well, and since then, very disappointing data out of China. So resource stocks have come under pressure. And the local market, while doing okay, hasn't done fantastically. So up low single digits. What's really put pressure on the local market recently is, or more throughout the first half of the year, was load shedding. We've seen slightly better data out of that. So that has alleviated some of that underperformance. But then globally, obviously, we've seen higher US rates. That's put some pressure on global markets, including the US market. And that's also spilled over into the South African market. And we see that in the Rand. If you look at the Rand weakening, it's about 10% weaker year to date. And that's really driven to a large extent by a stronger dollar. So if you look at the dollar versus a trade-weighted basket of currencies, it trades with the dollar's actually strengthened about 7% compared to the Rand weakening 10% to the dollar. So it really has been a US story this year to a large extent, especially in this last quarter, in my view.
I just want to stick with China. So China hasn't really done what we all expected, right? And to a large extent, it is because of the property market. Maybe, Nick, can you just touch on China and what were you expecting and what are you expecting moving forward?
Yeah, I think that's a fair point. I think it kind of is slower than we all expected. I think just to dispel the kind of commentary, I think China's not broken in our opinion. I think it's definitely going to go through a slower period. I think, as you mentioned in your question, I think the property market is going to be slower. When it's such a big portion of the overall GDP, when that doesn't grow, if actually it might even contract, it means that the other part of the economy needs to grow quite fast. I think what we're seeing is exactly what you said. They're not going to pump. They're not going to press the property market. So that means that the growth will continue, but at probably a slower rate than we thought for longer. So importantly, that does throw up opportunities as people don't want to be there and they're waiting for everything to settle. And the long-term future for us continues to be good.
Thank you. China forms part of BRICS. BRICS has now extended the number of countries there. How does this affect us as South Africans and the South African economy? Is this good or bad, or are you guys neutral on that? I'll go to you, Dave.
So, I mean, in my opinion, obviously inviting more countries into BRICS could be a small positive to South Africa. So you're opening sort of the lines of communication with more countries. There's maybe the opportunity for further trade. And if you look at BRICS originally, when it was the 5 countries that were in it, China was quite dominant. It was quite a large component to the BRICS, and introducing new countries maybe makes it slightly more democratic to a certain extent. So you can maybe voice your opinion and you won't be the one sort of standout within the group. So we think at the margin, slightly positive, but we can't see really any major benefit from the expansion of BRICS in the short term, in our opinion. But at the margin, probably slightly positive that more countries are being included. There is some political risk around the fact that someone like Iran has been included. But I mean, just because Iran's included doesn't mean we have to change our sort of international policies, etc. So I don't see that as a major risk.
So with the inclusion of Saudi Arabia, there's Russia and Russia as well. These are big oil producers and oil players. So, and oil has been doing quite well. What is your view on that in terms of oil, Nick, going forward?
Yeah, I think we have a view that oil is going to be higher for longer. I think it's premised on a few things. Obviously, it's premised on demand being, I guess, higher for longer, but also in the commentary that Dwayne was talking about is the BRICS and the kind of deglobalization of the splitting of the BRICS and them kind of wanting to show a bit more power. I think previously, if the oil price was here, you'd have an American president that phoned the Saudi head and say, listen, bring down the oil price. I'm not happy, and they'll probably do it. I think you're seeing a much stronger BRIC and much stronger Middle East where they're prepared to stand up to the other big developed markets. And I think there's a famous quote, when you have two big elephants fighting, the grass gets trampled. And I think that might very well happen just globally, that there's a lot of fallout from the kind of brick and the overall, and oil price might be one of them.
I just want to bring it back home now to South Africa now, and I include Laura in this question. So, Laura, what is your outlook for local interest rates and inflation, let's say short to medium term?
Sure. I think prior to the September MPC, everyone, was of the mindset that, rates were probably toppish, and that, we would likely see an easing cycle, happening before any more rate hikes. But I think that the MPC definitely came across a lot more hawkish than what the market was expected. So I think the kind of current market expectations are that there is a risk of another rate hike. It certainly looks like risks to inflation are on the upside. There is concerns around pricing of core goods. You've naturally had another spike in oil prices, which feeds through to inflation. So, previously we were thinking we were going to hit the midpoint of the target band towards the end of this year. It's likely that we will only get there towards the end of next year. So we don't foresee inflation moving out of the 3 to 6% target range, but we will probably be operating at a higher inflation than 4.5% for the next year.
Just staying at home for a bit. We all know that our state-owned enterprises are a disaster. What are your thoughts on the proposed state asset management company? I'll start with you, Dave.
So, I think it's a good idea, but obviously, the proof of the pudding is in the eating. So what it does allow, they say that at the board level of the asset management company, there will be private sector participation. So I think that's positive. It isolates some of the SOEs from political interference to a certain extent, but we'll see how that plays out. So that's positive. And hopefully it encourages more private sector investment in state-owned entities. Yeah. So we know they want to break up Eskom and see private sector investment in, say, transmission. We've seen at Transnet, the Durban container terminal, looks like there's private investment there. They're talking about the container line from Joburg to Durban having private investment there, which all is very positive. So I think it's a step in the right direction. But once again, we still need to see sort of deregulation and the private sector stepping in, because to a large extent, the government's also backpedaling and said they don't want to privatize a lot of the SOEs. And that's because of pressure from the unions, et cetera, that are very worried about jobs. So a step in the right direction, but still a long journey ahead of us, in my opinion.
Yeah. Since you still got the mic, Dwayne, I just want to pose another question to you. We've seen that the recent CEO of Process Naspers has resigned or departed. What are your thoughts on that? And I know that you guys have quite a large holding in your fund in those stocks. So what is your thoughts on that going forward?
So while it might have come as a slight surprise to the market that amicably he decided to leave between him and the board. Bob van Dijk was there for 10 years. If you look at his capital allocation track record, I think there were a lot of questions around that. While they did certain positive things like the share buyback, which the market really liked, he also went and invested in Delivery Hero at a share price much higher than where it's trading at the moment. He did set up, Naspers Process has got various verticals, so 4 verticals being classifieds, payments, EdTech and food delivery. And he did bring in various people he's worked at previously to head up those different verticals, and they've all departed recently as well. So I don't think it was that big a surprise. The new CEO was the Chief Investment Officer of Naspers Process. So Irvin Tu, he's got an interesting background. Originally at Goldman Sachs, then at SoftBank and the Vision Fund. They say he headed up the Uber transaction, which was successful, but the Vision Funds also had questionable transactions as well. I think the mandate the board's given him stays the same, so continued share buybacks, which is positive, and getting the core assets outside of Tencent profitable, and then unlocking value there through listings and trade sales. So I think nothing changes there. The big question will be, with regards to capital allocation, does he now decide to set up a new vertical and invest in artificial intelligence? And with the questions around the group's capital allocation in the past, there will be a lot of skepticism from the market in that respect.
I know you guys don't have a crystal ball. You cannot tell the future. But if I were to put you on a very tight corner, as some of our clients and financial advisors are put in a tight corner, how do you see next year playing out? Are you seeing a soft landing or a hard landing? Maybe I'll start with you, Nick.
Listen, as you say, crystal ball gazing, especially in the short term, is not an easy thing to do. I think if you push me, the answer I would give you is I think I'm in the hard landing camp personally, but I mean, there's so many variables to play out to make it a reality. I think, I'm in that camp. I think the one thing that you've got to bear in mind is that there's an election next year, which means that the US government really doesn't want an election, and the ability to kick the can, in my opinion, creates an additional variable. So it's a hard one to tell. You never underestimate a politician wanting to kick the can, and I think this time they probably will, but So it's a hard one. But at the margin, if you push me, I'm on a hard landing.
I just speaking of politics, right?
Yeah.
Next year we know it's election season. How are you guys tilting your portfolios in terms of trying to manage for these elections? And how are you thinking about your portfolios? I'll go with you, Nick.
I mean, remember, we invest for the long term. We're trying to look through some of these things. Obviously, there's an election every so often in the investment cycle, and we need to consider it. The way I say this election, it does look from pretty much everyone that's analyzing the situation that the ANC will get close to majority. They won't need the EFF to form a government. In that, it's a very, I guess, positive sign for markets, because markets don't like uncertainty. You can question how that plays out for the ultra long term, but I think in the short term, I think that'll be stability for the market. That'll mean that they get what they expect, and I think that'll be okay for markets. I think for me, the bigger question is actually what happens in the next election. Who's going to replace the current president, which is Ramaphosa, when his second term comes up? That to me is probably a way bigger question for investments than the coming election.
Thank you for that, Nick. I just wanna ask on Transnet and Eskom, Dwayne. I know that it's a big ticket item in terms of elections and election campaigning, and you spoke about it slightly in your presentation in terms of some of the good stories that you are seeing there. Can you just summarize some of the things that are happening in Eskom and in Transnet that are giving you a more exciting feeling about South Africa?
Sure. Look, I think a lot of the structural reform we're seeing in South Africa at the moment is driven by the crises we're seeing within the electricity sector and the logistics sector. So the government is very worried about the election next year, and that's one of the key drivers of why we're seeing change. If you actually look at the ANC's support over time, if you do polls, it actually fluctuates quite a lot with load shedding, for instance. So as load shedding picks up, their support drops down. So I think the ANC realizes it's very important to try and alleviate the electricity problem, and that's why we've seen regulatory changes. So they've allowed the private sector to come in. The great thing about that is the private sector has really stepped in. As I mentioned, 6 gigawatts of power registered with NERSA over the last year. That's 2 stages of load shedding. And it's very hard for the government, no matter what government it is, to backtrack on that. So you now deregulated the electricity sector. So it's less about Eskom at this point and just deregulating the whole sector. On the Eskom side, obviously they're looking to break it into 3 parts, and hopefully you can get private sector investment. But I don't think that we need that right now to solve the electricity problem in the short to medium term. That's a longer term structural issue. On the logistics side of things, we know Transnet's struggling, and we know the government is searching for private sector partners to come in there. And once again, that is because Transnet is in crisis. Across general merchandise, coal and iron ore, we've seen all the volumes that Transnet transports drop off quite a lot. And everyone in the country has seen a huge pickup in truck volumes across all our roads, which damages the roads, makes the roads more difficult to travel on. And so that has once again led to a crisis, and the government is basically forced to deregulate that sector. And we're seeing that across many sectors. But what's positive about that, I just want to come back, is that the private sector can get involved. And I think that's who will solve many of the structural issues in South Africa going forward. And if that momentum continues, I think it's very positive for GDP growth locally and the local markets.
So, Lara, I just want to ask you a question on the mini budget that's going to happen. What are your thoughts on it? And how are you thinking about your portfolio in terms of some of the things that might come out of that?
Yeah. So I think the biggest thing to look out for is what happens to issuance. I think the market is largely expecting that they will need to increase nominal bond issuance. But I think it might be a bit preemptive in that they generally only change issuance at an MTBPS if it is quite dire. Generally, they would like to only, the MTBPS is more just like a catch-up. Like, this is what we set out in February, and this is where we are right now. They don't generally make any changes if they don't have to. So I think that it's not highly likely that we see any changes in issuance now, but it is very likely that we see that in February. So I do think we just need to temper expectations about how much we want to see coming out of the MTBPS. We are not really going to be hearing about tax changes now. We, unless it's dire, shouldn't be hearing about issuance changes now. We might get some kind of clue as to where they think they will need to go in February, but it's not likely that we'll see any big changes for the MTBPS. Come February, however, it is very likely that there will be an increase in issuance. And, the market will need to obviously digest this. There's going to be a greater supply of bonds. So we will need to see where levels settle. But because it is so expected, I would be surprised if there was a massive sell-off on the back of that. I think that there might be some kind of readjustment, but I think it is largely expected within the market.
I think my last question to you guys is, there's a lot of negative sentiment around South Africa. The only thing that seems to be going well for us is the Springboks. What are some of the pockets of excitement and things to be cheerful that our financial advisors and the clients can actually look forward to in South Africa? I'll start with you, Nick.
I think people need to put things in perspective. I think importantly, the valuation is there for everyone. So while I might paint a very negative picture about the potentials for South Africa, at least the share market is starting to believe what that outcome. So at least valuation offers you an opportunity. And then as South Africans, we have a can-do attitude. We always seem to make it work. And it tends to be the private sector that takes the baton and kind of makes something out of nothing. And I think that's something to be positive about. I think we've got great people. We've got a beautiful country that should attract way more tourists than they do. We've got lots of sun that should grow the renewable side of things. There are many simple things that we can get right. It's just, I want to see that trajectory change. There's been one or two little small things, but I don't think enough just to get me over the line just yet. But I think, there are enough things to keep my ear to the ground.
Look, I think that the sentiment at the moment, particularly the last few months, has been so negative that even just a slight correction in sentiment would make things a bit better. We've seen quite extreme load shedding, but Kusile, already 2 units have come back online a lot earlier than expected. So there's a scenario in which, load shedding ends a bit earlier. There's, perhaps a lot of the bad news that we're expecting now will kind of go through the market. We are kind of peak cycle. So hopefully, there is some kind of foresight into a cutting cycle coming. There does seem to be a lot of noise around stimulus coming out of China. So although I don't think there's a very quick and easy turnaround story for South Africa, it might just be that a lot of the negativity alleviates a bit over the next few months. So I think that there is perhaps, over the short to medium term, a bit more excitement and a bit more positive prospects coming out of local markets.
So I would echo that. I mean, I think there is a lot of negative sentiment around from foreign investors because of load shedding, but obviously they're now looking at the market again because load shedding is alleviating. From local investors, because, you see all the negative stories all the time, but that's more than priced in the market in our view. So you're still finding great opportunities that we think will generate decent returns, even if we don't see large structural change. If you then overlay structural change, which we are seeing, I mean, that would rarely drive returns, and that could be very positive where we see GDP growth again above 2%. And overarching, I'd say the resilience of the South African businesses and South African people is very impressive. I was speaking to a person that lends into the small, medium enterprise space. And when load shedding first hit, their underlying businesses they'd lent into were under a lot of pressure, and a lot of them were close to closing. But he says now, I mean, let's call it 6 months later, when you see load shedding really pick up, I mean, those businesses are trading right through it. So they've all made a plan to trade through it. And we see it in the listed space as well. So, the South African businesses have already made a plan. They're very resilient. The consumer has been more resilient than expected. So I think you've got cheap valuations with quite a resilient, quite a lot of resilience within the business space. and consumer. And then if on top of that, you get good structural change that can really drive growth and, get investor and consumer sentiment up again, I mean, we could be in quite an interesting space in the medium term.
Thank you, Siyabonga Bayadanki, for joining us today.